Good morning. Today is Tuesday, May the 23rd. The time right now, Singapore is 11:47 in the morning. We have about maybe 13 minutes to noon, and let's do a bit of recap as to what happened on Wall Street overnight. Because the debt ceiling negotiation has not come to any kind of fruition, there is no new update, and the market is basically drifting along. But overall, we can sense that the market wants to go higher, because technically it does give us the impression that it does want to go higher, because later on when I show you the Nasdaq 100 chart, it has already broken into a brand new high for the year. So that is the tone underlying US equity markets. Market participants are overall very optimistic that eventually a deal on the debt ceiling will be reached, and that will be bullish, at least in the short term. Okay, so based on the Dow Jones 4 hours time frame, you can see that Dow Jones closed last night at 33,284.7, which is within this bracket of prices which I've highlighted many times, which I think will be conducive to actually take up long position. That level is 33,253 to 33,230. Okay, so this area is actually rather conducive for taking up a long position, with the prospect of actually attempting to challenge the month high so far at 34,257.8, which is not far away from the year high at 34,342.3. So overall, these two levels may actually be a near-term target. We will act as some kind of a magnet. Okay, but overall, we can see that the market does really want to go higher. Over in the S&P 500, we also saw the same thing. Market did not move very much last night. We can see the price closed just under 4,200 points at 4,195 overnight, and this has already seen prices trading at the high of the year at the end of Friday's trading at 4,212.8. So near term, it is very likely the market may actually trade a little bit higher to within the 4,240 to 4,342 levels, which is my original target for this move here. But overall, we can see the upside, based on what I can see, is probably quite limited, at least in the short term. So do be aware that there is the risk of a downturn. Over in the Nasdaq 100, earlier on I did mention the market is already trading at a new all-time high, not all-time high, at a new year's high at 13,893.7, and right now when the market is already trading above last August high, which is at 13,721. Okay, so near term the target is at 14,134 to 14,712. So again, based on my criteria here, it does look like the upside potential is getting very limited. For those who are still long or intend to go long, be very careful as to any kind of short-term sharp reversal that may actually occur on the back of a uncertainty over the debt ceiling negotiation. Over in Asia, we can see the Hang Seng Index is still basically quite weak. We have a bit of a rebound last night, but that rebound can only manage a high of 19,806 before this morning it come back down to 19,558 as we are right now. So there's a risk the market will continue to edge lower. Near-term target is probably somewhere around 18,660 to 19,000 levels. So by and large, the downside is not fantastic. So the risk to the downside is also quite contained. Likewise is the risk to the upside, probably going to be contained at 20,800 to 21,100. So by and large, if you can afford not to do anything on the Hang Seng, just watch and monitor. However, in the Nikkei, the Nikkei is a different animal altogether. This morning we have another high traded in the Nikkei, bringing the high to 31,352.5, which is already above the August 1990 high. So we are talking at a more than 30 years high compared to where we were relative to the other equity index. So this is a relatively elevated prices, very close to my target prices of 31,605. So again, be very careful chasing this market ever higher, because it's so near to my original target here at 31,605. Over in China, we are beginning to see a similar pattern as been traced out in the Hang Seng Index. We had a marginal rebound last night, okay, but again, market is coming back down again as we are speaking. Last traded is 3,948.7, and not sure whether it can hold because we have seen prices actually held at the last month's low somewhere around 3,935. But if the market closed below this level, it is likely to extend lower into 3,758 to 3,850 level. So again, downside is quite obvious here. Over in energy market, we can see crude oil prices basically maintain its elevated price at $42.30 as of right now. By and large, I do see the possibility of an extended pullback here in a technical pullback, what we call a corrective decline. Ideally within the $67.51 to $69.07. That will be a great level to pick up some long position, because I think the market is basing right now, getting ready to challenge the month high so far at $76.07, with the possibility of challenging the $83.50 sometime, possibly next month. Okay, so the upside potential is actually quite great when you compare where the risk is. If the risk can be contained below $63.70, I think this trade on the buy side may actually be worth your while to consider. Okay, now over in precious metal, we see the prices did pull back early this morning. Right now, spot gold is trading at $1,962, and it probably would dip further. The risk here is the market will go below $1,950, and if that's the case, it will open up the possibility of another dip to the alternate target somewhere between $1,864 or $1,911. So there is still possibly another drop here, consisting of another $50 drop. So if you are not willing to buy at this current level, which is getting very close to what we call a superior risk reward ratio, then I think current level is actually starting to look very attractive to go long. But however, if you think the market can actually extend lower, which will eventually form a 5-wave, then obviously this will have to hold off and wait for the market to dip into the alternate target zone of 1864 to 1911. Okay, so do watch out for this possibility here. Over in the spot silver, prices is also pulling back. Prices now is at $23.57, not very far away from the month low at $23.32. So by and large, if the market continues to dip, watch out for buying opportunity here, because this market does look like a better buy than gold right now. Okay, over in the dollar, you can see the dollar actually stabilized last night after pulling back from 103.49, and if that's the case, if there's not enough momentum to see the market tick up higher to 133.50 and beyond, the market may actually pull back a little bit more to possibly 2 target zones. One is 102.36, the other one is to 102.80 levels. Now the other deeper corrective pullback may see dollar index pullback to 102 to 102.36. So either of this buy zone is actually quite conducive, because I do believe that dollar index may actually at some point go and challenge the March high, which is at 106.07. Okay, so do watch out. No, sorry, 105.87. My bad here. Okay. Over in the major currency, we can see that the if dollar wants to go higher, obviously we need to sell the other principal currencies. And if this rebound that we see in dollar, euro dollar continue to rebound from 107.60, ideal target will be 108, 109 level. 109 actually, 109 level will be a great level to consider going back to sell the euro dollars for the possibility of the market going below the April low at 107. So do watch out for this possibility here. Over in sterling, similar, the rebound from 124.90 looks like they will be extended higher. Ideally, we can see the price go back to 125.30 levels. That will be a great level to consider selling, because I do expect the price to come back down and possibly test the April low of 122.75. Aussie, similarly, we want to sell on the rebound. Market is rebounding from 0.66 all the way ideally to hopefully 0.6710 levels, and this will be considered a great level to consider a short position, with the possibility of challenging the low in April at 0.6575. Dollar CAD is a different creature altogether, although I'm bullish on dollar overall, but the dollar CAD looks like it may actually go down because of rising energy prices, and that it will be conducive to the Canadian dollars, which is traditionally correlated positively to the price of a crude oil prices. Okay, so if that's the case, if we see an extended rally in the dollar versus Canadian to somewhere around 135.70 to 136, that will be a great level to position short, with the view that market will eventually come back and test the 132.75. Dollar yen is looking to be very, very strong. If we do get a pullback now, dollar yen at 138.87 is at the year high so far, and if the market continues to extend higher, it could possibly challenge last December high at 139.90, and barring an extended run to 139.90, if the market do pull back to 136.30 to 137.70 levels, look out for a buy position, because I think the market wants to go higher, which is in line with the outlook for a bullish dollar index. Okay, over in Bitcoin, we do see that Bitcoin actually have a significant rally this as we are speaking right now. This level that I mentioned in previous updates at 26,500 to 26,735 looks like it is playing out very, very well. And the last we saw that was on yesterday. The market actually pulled back to 26,547 before we see this latest move up. Currently, Bitcoin is trading at 27,370 levels, and it may actually extend it higher in a three-wave corrective rebound, primarily to challenge 28,250 to 28,700 levels. So this will mean the market is doing a corrective three-wave rally, and if that's all you can do, you may see lower prices eventually. But if the market blow through 29,000, it is on the way to challenge the 30,000, which previous three attempts has not quite been successful. So there's a good chance that the fourth attempt may be successful this time. And if that's the case, we may be looking at a level beyond 31,000, possibly to 33 to 34,000. Okay, so it's actually quite a good risk reward when you look at Bitcoin in this perspective here. Right, guys, this is all I have for you for today. I will continue to give you another update tomorrow at the same time, around the same time. In the meantime, you take care. I'll see you tomorrow. Bye-bye.